The trade that usually damages your account the most is not the losing trade. It is the next one, the one you take while still emotional. Listen, this is one of the most expensive emotional trading mistakes beginners keep making, and most traders do it without even noticing. A trade loses, you feel irritated, you feel cheated, you feel like the market just took something from you. Now the chart is no longer just a chart, it becomes a battlefield, and the next click is no longer neutral, it is emotional. That is where money starts disappearing. Pay attention. The previous trade is often still alive inside the next decision. That means the loss is over, but mentally it is not over. You are still carrying frustration, still carrying urgency, still carrying the need to recover. And that emotional residue contaminates execution. This is where accounts get drained. Now let's be honest, how many times has this happened? You lose, and within minutes, maybe seconds, you are scanning aggressively for another setup. Not because the setup is amazing, because you need relief. You need the money back. You need emotional correction. So the next trade is not really a strategic trade, it is a therapy trade, a recovery trade, a revenge trade. And revenge is expensive because revenge entries are rarely patient, rarely selective, rarely calm. They are urgent, forced, and urgency destroys quality. This is why this emotional trading mistake hurts so much. The first loss may have been small, the emotional next trade makes it large. Now listen carefully, this same problem happens after wins too. Most traders think emotions only hurt after losing. Wrong. Winning can destabilize you just as much. You catch a good profit, confidence rises, but now it is not calm confidence, it is emotional inflation. You feel hot, you feel sharp, you feel like you are seeing everything. So what happens? You lower caution, you take the next trade faster. You size up, you become reckless, because the previous win is still mentally controlling the next decision. Do you see the pattern? Loss creates revenge. Win creates greed. Both destroy neutrality, both contaminate the next trade, and both empty accounts. This is why traders self-sabotage over and over, not because they do not know setups, because they cannot emotionally reset. Now here's the expensive truth. Every new trade should be a fresh probability event, but beginners do not treat it that way. Beginners drag emotional history into current execution. The last trade lost, so this one must recover. The last trade won, so this one should keep the streak going. That thinking is poison. Because now the current setup is not being judged on its own quality, it's being judged through emotional leftovers. And emotional leftovers distort perception. Average setups start looking amazing. Bad setups start looking urgent. Risk starts feeling justified. This is where emotions empty accounts. Now pay attention. Professional traders understand a law beginners ignore. Every trade must emotionally begin at zero. Zero frustration, zero greed, zero urgency, zero attachment to what just happened. Why? Because the market owes you nothing from the last trade, and the next setup has no responsibility to heal your emotions. But struggling traders expect exactly that. They expect the next click to repair the last feeling. That is why execution becomes contaminated. Now let's break down the most common emotional carryover patterns. Pattern 1. Loss creates anger, then instant re-entry. You want to prove the market wrong. Pattern 2. Loss creates fear, then hesitation. Now even good setups feel dangerous. Pattern 3. Win creates greed, then oversizing. You want to capitalize on the hot hand. Pattern 4. Win creates overconfidence, then careless standards. You think discipline can relax. All four patterns have one thing in common. The previous trade is still controlling the current one. That is the emotional trading mistake. And it's expensive because it multiplies damage. One trade becomes 3 bad decisions. One feeling becomes several leaks. Now let's talk correction. How do professionals stop this? Simple. They force a reset between trades. Not optional, forced. After every closed trade, win or loss, they pause. No instant clicking, no impulsive scanning, no emotional continuation. Because the first goal is not another setup, the first goal is emotional neutrality. Listen, if your breathing is faster, if your mind is arguing, if you feel the need to make something back, you are not neutral, and non-neutral traders should not execute. This one law saves accounts. Now here's a practical between-trade reset you should use. Ask yourself, am I trying to recover something? Am I trying to extend a winning feeling? Would I take this exact setup if the previous trade never happened? Is this chart opportunity or emotional urgency? Can I enter this trade with zero mental noise? These questions expose contamination instantly, and contaminated execution seen early can be stopped. Ignored contamination becomes account damage. Now, this is the identity shift. You must stop being a trader who carries feelings from candle to candle and become a trader who treats every trade as independent. No revenge memory, no winner's high, no emotional debt. Just process, just rules, just neutral probability. That's what pro execution looks like. Boring? Yes. Profitable? Far more often. Now imagine losing a trade and instead of emotionally lunging for another one, you stop. You reset. You wait until the mind is flat again. Or imagine winning a trade and instead of acting invincible, you keep the exact same caution. That trader becomes consistent because now emotions are no longer chaining trades together into disasters. This is what most beginners never realize. The expensive trade is often not the first emotional moment. It is the trade you take while that emotion is still alive. That is the hidden leak. That is the silent account drainer. And until you fix that, the market keeps charging you emotional tuition. If this exposed the emotional trading mistake quietly costing you money, subscribe to Online Trading Hub for more brutal trading psychology lessons that build discipline, neutrality, and professional execution control. And remember, a closed trade should close emotionally too. If it stays alive in your mind, it keeps trading your account for you.